So I still actually feel very good about gold. I think it's likely to end this year higher. But if the profit taking starts triggering stops and it becomes a bit of a waterfall event, I can't promise you that won't happen. I can only say that if it does happen, then I'll be, going over my shopping list and checking it twice, looking for those opportunities.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for February 24th through March 3rd, 2025, while supplies last. Our choice 1-ounce backdated silver Royal Canadian Mint Wildlife Series coins are just $2.99 over spot per ounce. Pre-1965 mixed junk silver is just $1.99 over spot per ounce. And pre-65 half dollars are just $2.25 over spot per ounce. Backdated 1-ounce gold South African Krugerrand are just $49 over spot per ounce. And 10-ounce silver Nordic Mint bars are just $2.10 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Lobo Tiggre, the independent speculator, independentspeculator.com. Lobo, thank you so much for joining us today.
Happy to be with you, Elijah.
Well, it's great to have you today. I did want to maybe start off with an update on the gold market. We've obviously had a good leg up beginning the year. We are seeing a bit of a pullback today as we record this on Friday, February 28th. Your take on what's happening right now?
Boy, there's two completely different directions I want to go with this, because on the one hand, today, right, gold's down today, was down yesterday, significant, not huge, but a significant turn. At the same time, Bitcoin's gone into reverse in a big way. And this isn't schadenfreude here. I'm not trying to say, oh, well, I feel good because Bitcoin's doing even worse. But I mean, it's an interesting coincidence, let's say. Obviously not. So as a market observer, I'm asking myself, what does this mean? Does this mean anything? There's been volatility in the broader indices. As you and I record, then we're seeing some grain on Wall Street, but it's been a tough week. So my wolf whiskers are twitching here. It's the market, has been volatile since Trump was elected. It's been very volatile this week. We might be at something of a tipping point. It's not a prediction. I said might, but it's interesting. We got, with gold specifically, we got within kissing distance of 3,000, a big round number like that. It could be the sort of thing that ignites a flavor of the day, off to the races, some new high because everybody gets all excited. Or it could trigger profit selling, which might be exactly what we're seeing right now. And I can't tell you which it is. Nobody could. We're just going to have to watch this. That aside, that's the near term. Gold has displayed remarkable strength in the face of what would normally be tremendous headwinds. Higher for longer coming from the Fed, higher dollar. Supposedly, the inflation story has been, problematic for gold in the last couple of years, though that has changed. So there are a number of things that, should have whacked gold down recently, and they haven't. And I don't think it's just a central bank buying that's enough to explain all that. So I still actually feel very good about gold. I think it's likely to end this year higher. But if the profit taking starts triggering stops and it becomes a bit of a waterfall event, I can't promise you that won't happen. I can only say that if it does happen, then I'll be, going over my shopping list and checking it twice, looking for those opportunities.
Now, you mentioned in a recent article about actually your meeting with Doug Casey that gold, has come close to 3,000, but it's not like all the miners are doing perfectly, right? You have to be very selective when looking at the miners right now, even though gold is so has run up so much. So your perspective on that?
Well, sure, gold's gone up, but not in a vacuum. Other things have gone up too, and you could say, "Hey, great, copper's up too." Well, but iron is up, but those are inputs for your gold miner. So, The best thing we can say is that oil is actually not kept up with the commodities complex this time around, and that has helped. So, there's a couple takeaways here. One is, if your gold producer is not seeing better margins, then you got to ask yourself, who put that gold producer in my portfolio? There's something not right with this company. The other thing, though, is like in terms of the big boys, we've seen some of the producers miss guidance or not even guidance, miss analyst forecasts, right? And so they've been punished for not being as good as the analyst forecasts. But those forecasts were extremely bullish. So you've got companies, and I'm not going to name names, but you know who they are, some of the big boys. They've actually seen huge increases in production and money. They're making more, but they didn't increase quite as much as the analyst expectations. And then the stock price gets trashed. That's crazy. The company is mining more, is making more, and the share price goes down because some, analyst got overly excited or something. That makes no sense. And I do see that as an opportunity. But I would still, as you say, it's a stock picker's market. If the fluctuations put the best of the best, if not on the deep discount rack, but at least, back relatively on sale again, why would I go for anything less than the best?
Is that what you're expecting? Because you mentioned how the stock market looks possibly toppy. It's a lot of people I've been talking to in the last couple months have been pointing to different factors, whether it be, the uninversion of the yield curve or many different factors showing that things could be coming to a head. We could see a stock market sell off. If we do see that, what we've seen in the past is gold, silver, and really anything with a bid takes a hit often because of margin calls.
It could actually be what's happening now on a micro level. Like this sell-off in Bitcoin and crypto land writ large, but in Bitcoin in particular, that's a huge drawdown. We're almost back to November levels. We're almost back to the election levels. It was under 79,000 this morning. It was 78 and change when I saw this morning. That has, the people who chased it and people who said, oh, it's 100,000, it's going to straight to 1 million, right? Those people are going to be deeply underwater. Some of them are going to be bailing. And where do you go? If you've got a margin call or something, right? That's when you dip into a safe haven. So in the same way, as you're rightly saying, if you have a big market waterfall event, a liquidity event, you sell what you can get a bid. So this could be happening right now. We could see some sales in gold right now because people need the money to pay off their margin clerks on their Bitcoin, options or calls. It may not seem fair or right or whatever, but remember, most market participants, they're not stackers like you and I and our brothers and sisters out there. They're mainstream, commodities traders, comics traders, right? And they're just trying to make a buck here and there on the trades. So it makes sense. And the thing about the market crash thesis, though, and by the way, we have a free market crash survival kit on the website. If you go to the free report section of our website, if you don't mind me tooting my horn on that. The thing about this is gold bugs are so skeptical of the mainstream system. I can't recall a year when there wasn't one or two or a chorus of gold bugs calling for an imminent market crash. Now, it might be true this year that we might have gotten to the point where, the ridiculousness of it all just comes undone. The Magnificent Seven go into reverse in a big way. And then people realize that, the not so great 493 are really in trouble, right? And this could be it. We could be on the verge of a major waterfall event in equities writ large, markets writ large, but we might not be. We could actually see that very sign of trouble. The Fed has trained people. The Fed has trained mainstream investors. Oh, trouble is good. Bad news is good news, right? So this very thing that might tip the markets over the edge could be the thing that has everybody saying, oh, the Fed's going to come to the rescue. So let's buy. I'm not sure where you want to go with that, Elijah, but I guess what I want to say is yes, there is a non-zero chance that we could see one of these tipping points. And if gold gets whacked because other people get exposed on other investments, that's a buying opportunity. But don't bet the farm on that. We could see the opposite. I mean, it made no sense for markets to go nuts in 2021, but they did.
Definitely. So it sounds like, I mean, obviously we can't give financial advice, but maybe don't be waiting with all your dry powder for this pullback. There's still deals right now.
Actually, I am very much right now. I'm in powder accumulation mode. If I saw a really great speculation that I'd overlooked before, a compelling value proposition now in the commodities that I favor, I can't say I wouldn't buy anything today. But today, with the market volatility we're seeing, my general inclination right now is actually build cash. I think, I would love to see that all of my favorite commodities just go straight up from here, Elijah. Gold, silver, copper, uranium, the bottom's in, and woo, they're just going to go great. But for what it's worth, my wolf whiskers are twitching. I don't know what's going to happen. But if we get a big liquidity event and a big buying opportunity, I will be glad to have cash ready to deploy.
No, I did want to get your take on another, also relating to gold, right? So we've had you on since Trump was elected and kind of got your take on that. But I did want to ask if you had an update on that now that, Trump has been inaugurated and we're seeing, Doge and people are, it's kind of two different camps, it seems like. One camp is saying, well, good days are here, and now we're going to get the fiscal situation under control. And then another camp, and then that's bad for gold. And then you have another camp saying, well, no, what about revaluing gold? Maybe Scott Bessent will revalue gold and everything like that. And, gold will go super high from here. So your perspective on those two things. Yeah.
Well, so the expectation thing is really interesting. And if you look at these polls, it's been really since the election, like the ones I forget, whether it's Conference Board or University of Michigan or one of these guys, they ask the people for their political affiliation. And the inflation it's funny. I mean, it's sad, but it's funny. And it's so human, right? The Republicans' inflation expectations are like zero. Trump is going to, there's no inflation under Trump. And the Democrats think it's going to be 6% or 7%. And you average that out, and it's like 3%. And it's the opposite. Like, you asked them about growth. Well, the Republicans think there's going to be all this growth, and the Democrats think we're going to have stagflation or stagnation because it's Trump, right? So clearly, there's bias on both sides, right? So these expectations and what's going on, it's funny, but it's noise, right? We can't really rely on these numbers. What we can say, though, is that, Doge has, I have to say, I was wrong, dear audience. I was wrong. I didn't think that Doge would really make any material change at all. I thought we'd see the Grace Commission on steroids, a lot of noise and thunder. But ultimately, what power would they have? They make recommendations, and in Congress, as always, does nothing. But in fact, Trump gave them power. He gave them through executive branch direct power, at least on the parts of the government where the executive can, apply its authority. They've started. They haven't waited for the committee hearings. Back in the day, they'd still be picking office furniture for what what Doge is going to do, and making sure they have the wallpaper the right color to match the Doge logo and all this stuff. We're only a couple of weeks into this, so the fact that they've actually cut anything, and remember, in Washington, a cut is a decrease in the increase in the budget. If you propose a 10% increase in the budget and they slash it to 5%, this is seen as a cut, whereas, it's actually an increase. And so for Doge to actually cut anything at all, and people are like, oh, it's just a few $1 billion. It's nothing. It's a drop in a bucket. Well, pardon me. That is more than anybody's ever done before. Like, to me, this is my metaphor for this is, if you have a dog that gets on your computer and writes an essay, you don't whack the dog for making spelling mistakes. It's a freaking dog that wrote something, So this is how I see, sorry, Doge dog, It is amazing to me that this has happened. So, boy, this is a long preamble. Where I'm going with this is I'm trying not to poo-poo Doge. I am admitting that both Elon and Trump have exceeded my expectations, done more in the real world than I thought they would. But the federal budget is this giant monstrosity. We're not touching the entitlements yet. We're not touching the interest payments alone, right? Over $1 trillion. So I don't think what we're seeing yet. Now, maybe over the course of the year, they can come up with these trillions in savings and it'll make a difference. But right now, it's not really material. The people who are saying it's a drop in the bucket, mathematically, those people are correct. So the inflationary agenda is there. That's real. And the savings that might help that are still hypothetical. So takeaway from this is my outlook is still inflationary. That's very good for monetary metals, gold and silver. It's generally good for commodities writ large, selectively there. But it is good simply on the basis of the inflationary outlook for gold and silver. And then there's also just the chaos factor, the safe haven factor. And that goes back to why I said before, I don't think it's just the central banks buying. I think there's a lot of deep pockets in the US and around the world that are starting to say, you know what? Kind of a crazy world out there. It wouldn't hurt to hedge our portfolios with a little bit of gold. And as our mutual friend Rick Rule likes to say, you know, if we revert to mean of the multi-decade average of 2% allocation to gold, that would quadruple the investment demand for gold. I'm not predicting that. I'm not sure we'll ever go back to that mean. But even if it just goes back to 1%, right? 1% is not a crazy number to say, gee, that, we'll allocate a little bit of insurance in our portfolios. 1% is not a crazy number. That would double the investment demand for gold. So all very bullish to me.
And then looking forward here, obviously, it seems like, as you mentioned, that Doge has been doing more than you were expecting. And I think it's great what they're doing. But at the end of the day, as you mentioned, not looking at entitlements, how are they going to cut maybe military spending, like the big ticket items there? So the fiscal situation is probably still not a good path for the U.S. But what about this idea of revaluing gold?
Right. Yes, that was part.
Scott Bessent has actually addressed that specifically and said when it was on Bloomberg, he was saying, when he had mentioned in the Oval Office that they were going to monetize the asset side of the balance sheet, he was not referring to, revaluing the gold in Fort Knox.
Yeah, that was really interesting. And it was interesting that the Bloomberg people, of all people, brought it up, and they asked him twice. Like, they didn't just let him weasel out. They said, "Well, what about this revaluing the gold in Fort Knox?" And he shakes his head and he says, "That's not what I had in mind." As you say, other things, right? And but will they? Trump is talking about revaluing, or somebody's talking about revaluing it. And he just repeated, "That's not what I had in mind," which is, clearly he doesn't want to contradict the commander in chief, right? He doesn't want to get in trouble with his boss, but it's not something he wants to do. It's not what he has in mind. But so he was kind of caught between what he thinks is right and not wanting to contradict the consensus in the White House. It's interesting. You mentioned my conversation with Doug. Doug thinks that's going to happen. He thinks that this is going to be part of the solution for the powers that be. If they revalue the gold, then that's a huge plus to the balance sheet of the United States government. And Doug thinks they won't even just mark it to market. He thinks they'll take it to $25,000 or $30,000 an ounce. Now suddenly we have a big surplus on the balance sheet, right? Hey, we're in great shape. We just went from triple C to triple A credit rating. I can see the argument for that, but that is a big ask. That is a tall order. And if you already got people like Bessent sort of shaking their head and saying, "That's not what I have in mind," that would be rocking the boat in a big way. It would be a de facto capitulation, really, of fiat, admitting that gold is worth 25 to 30,000 per fiat unit in the United States. That would be a huge mea culpa and admission of the loss of the value of the dollar. And Trump has, at least rhetorically, he's been talking strong dollar. So I'm not sure Trump would go along with that. So anyway, who knows? I don't think Doug or Rick Rule or you or me, none of us know if this is going to happen. So I'm not going to invest. I'm not going to make my investment decisions based on a revaluation of gold. If it does happen, I think it's nothing but bullish. There's no way that is bad for gold. However they play it, whatever price they do. I mean, even if they go under spot, if you go from 42 to anything north of that, there's no way that's bad for gold. So let's just set that aside. If it doesn't happen, so what? I'm already bullish on gold for other reasons. If it does happen, it wouldn't change how I invested. It just adds a tailwind to what I'm already doing. So I don't need to figure this out, Elijah. I don't know, and I don't need to know what's going to happen. It's just a potential tailwind.
Now, I remember last time you and I talked, I think my Father Dunnigan interviewed you last time, but last time you and I talked a couple months ago, you had mentioned your highest conviction trade for 2025 is going to be copper. Copper's been doing pretty good this year. Do you think it's still on sale, and people should still look into some of the miners or the physical commodity?
Right. Of my favorite metals at the time, the copper was still relatively on sale. I have to say right now, uranium is more relatively on sale. I mean, we've had a 40+% correction in uranium over the last year. So, it's easy to see more upside there than it was when it was around 80 when I made that call. That said, I got to face the facts here is that, okay, I said copper was my top pick for 2025, and copper's gone from $4 to $4.70 or whatever it is where we're recording at the beginning of the year. A nice start, fresh out of the gate, but it's not for the reasons that I thought. Right? The inflationary outlook and the supply and demand crunch on the copper side hasn't really hit. Now you could say, oh, well, Trump talked tariffs for copper. Well, actually he didn't. The executive order is not a copper tariff. It's a study where let's find out, should we do tariffs? And if the people doing the study have any sense at all, the answer should actually be no. It would be crazy to do tariffs. We don't have enough copper in the United States. Yes, there's resolution. There's a few deposits that could be brought online, but there's no way they can make up for all the copper with ramping up production inside the United States. It would take, even if they streamline the permitting, Operation Warp Speed for mining projects, I'd love to see that. Fantastic. I'd be all for it. You might take a 10-year time frame and make it into a 5-year time frame. If you're going to endure high copper prices, and remember, this is Dr. Copper. This isn't just some tiny little oddball metal that goes into a few, atoms here and there. And, this is a major industrial mineral. If you're going to make that more expensive inside the United States for 5 to 10 years, yeah, you might eventually create more production in the United States. But what are you going to do in the meantime? It's hugely inflationary. It's hugely problematic. The rational answer here should be, don't do it, sir. Right? And besides, who's he trying to browbeat with this? I mean, Peru and Chile, these are not public enemy number one. So where I'm going with this is there's been high volatility in the copper space. That's not what my thesis was. My thesis was simply copper was relatively cheaper than the other metals I'm bullish on. The outlook is inflationary, and I expect that to play out by the end of this year. What we have right now could easily go into reverse. Who knows what that study group is going to say? Who knows what the tariffs are going to be? And maybe Mexico and Canada produces a lot of copper for the U.S. Maybe they work out a deal and those tariffs go away. So the near-term tailwind that has benefited copper could easily go into reverse, like in the days or weeks ahead. In which case, I'd be buying with both hands. If we get a sale in copper again, before the stuff that I'm expecting to happen comes, I think that'd be a buying opportunity. And by the way, if silver is financially an alloy of copper and gold, right? It has its industrial size like copper and it's a monetary metal like gold. If I'm bullish on both copper and gold this year, I have to be bullish on silver. But if the industrial question goes into reverse on the copper side, that could produce a bigger buying opportunity in silver than gold. So that's something else I'm watching for.
Another wild leg seems to be possibly inflation, because I know you've mentioned that probably we're going to see higher inflation going forward. So how do you see that kind of impacting things if the economy turns down and we still see inflation? How do commodities react to that?
So if the economy turns down, that should be bearish for industrial minerals like copper and anything else. But if the inflation overrides that, and this is part of the fiscal dominance thesis, Linald, and it might be that the fiscal dominance overwhelms these other pressures. What should be a recession, I think over the last year or two, hasn't been for this very reason. And commodities prices have rebounded. So there is potential for, if not 70s style, but at least some level of stagflation where you see economic weakness and commodities prices going up anyway. right? That's what stagflation would do. And then, plan B would be there actually isn't that much recession, whether it's Trump enthusiasm or whether it's deregulation or tax cuts or whatever. If American firms start investing more, hiring more, you could see not stagflation, but a reflationary boom. And that would be even more bullish for commodities. So besides short-term noise, chop in the near term, I'm actually quite bullish on monetary metals and the commodities complex going forward. But I want to be selective. So for example, in the oil patch, we still have voluntary constraint on the part of OPEC plus. So until that goes away, it's hard to be very bullish because, the moment there's more of a bid, then there can be more supply. It's hard to be very bullish in that context. Let's say nickel, for example, we've got Indonesia and others pumping out, nickel like there's no tomorrow. And lithium, we've got a new technology that, instead of the evaporation technology, we've got the DLE, the direct lithium extraction that's starting to happen. And it's low cost and it's potentially a big new source. Meanwhile, more conventional production, China has, outlined huge reserves and is ramping up production. So if the commodities complex as a whole averages upwards, which I expect, that doesn't mean that the rising tide will necessarily lift all ships. I think you have to be selective. You have to pick your commodities. Look for the ones that have actual supply constraints. Don't bet on them all. Look for the ones with supply constraints.
Well, many things to consider for our viewers here. We really appreciate your time as always. If our viewers are interested in learning more, it's independentspeculator.com. Did you have any last thoughts for our viewers?
Yeah, as you and I are recording, there was a shouting match in the Oval Office between President Trump and President Zelensky. I'm not going to get political about that, but I just want to say, we're living in a world where geopolitical risk is non-trivial. And whatever I might do with my portfolio as a speculator and investing in mining stocks, that's one thing. Bullion, the business that you guys are in, gold and silver that I can hold in my hand, it's not a speculation. It's not even an investment. It is savings. It is cash that you could tuck under the mattress if you want. In a world like we're living in today, I think it behooves everybody to make sure they have enough savings in real money.
Fantastic. Well, Lobo, we really appreciate your time today. We'll put a link in the description of this video to your website so people can check that out. Thank you so much and God bless.
Thank you, Elijah.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for February 24th through March 3rd, 2025 while supplies last. Our choice 1-ounce backdated silver Royal Canadian Mint Wildlife Series coins are just $2.99 over spot per ounce. Pre-1965 mixed junk silver is just $1.99 over spot per ounce. And pre-65 half dollars are just $2.25 over spot per ounce. Backdated 1-ounce gold South African Krugerrand are just $49 over spot per ounce. And 10-ounce silver Nordic Mint bars are just $2.10 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.